Hi, welcome to another edition of CMS Forex News. This is Andrew Pang, and today is Friday, September 12, 2008. In New Zealand, retail sales declined 0.8% in July, nearly wiping out the growth seen in June. The number disappointed forecasts. Core sales were down a more tepid 0.2%. In Japan, second quarter GDP was revised down to show a 0.7% decline, which matched forecasts. The annualized rate now shows a 3% fall. That's a big downward revision from the advance estimate of 2.4% and is the steepest contraction since 2001. Industrial production in Japan surprised forecasts on the upside, increasing 1.3% in August. On the year, production is now 2.4% higher. Shipments were up 1.9%, while inventories declined slightly. Asian equity markets rebounded overnight, and the Kiwi-yen pair rose almost 300 pips from yesterday's low at 68.50. News that another deal was in the works for Lehman Brothers helped quiet the storms in equity markets and increase risk appetite going into their weekend. In the Eurozone, production fell for the third straight month in July, declining 0.3%, which was lower than forecast. June's figure was revised down on the year. Production is 1.7% lower. Eurozone payrolls grew by 0.2% in the second quarter compared to the first quarter. On the year, employment change cooled 1.2% from the 1.6% seen in the previous report. This is the slowest pace since the fourth quarter of 2005. European stocks were positive on the day, snapping their losing streak and injecting some life into the beleaguered euro. After sliding to 147.40 yesterday, the euro-yen pair jumped 480 pips as investors covered their short positions going into the weekend. In the U.S., retail sales fell for a second straight month in August, coming in below expectations. Sales were down 0.3% for the month, and July's figure was revised modestly down to show a 0.5% fall. One factor was a decline in gasoline prices, which brought down spending on fuel. U.S. producer prices saw a sharp drop in August, falling 0.9% as energy and commodity prices eased. That was the biggest monthly drop in nearly 2 years and helped bolster the case that inflation should begin moderating in the months to come. Core prices, however, met forecasts of a 0.2% increase. U.S. inventories rose 1.1% in July, almost double the forecast rate, as companies seem to be getting stuck with unwanted goods amid a softening economy. The mid-September UMich Consumer Sentiment Index jumped to 73.1, surprising forecasts on the upside. Both the current conditions and future expectations indexes rose, while both the 12-month and the 5-year inflation forecasts fell. After hitting a one-year low yesterday near 1.39, the euro-dollar pair climbed almost 280 pips. Speculation spread that the Fed's next move may be to lower rates, instead of raising them, as had been the conventional wisdom when inflation was the main problem, and so the dollar was pressured. The pound-dollar pair soared 450 pips as Lehman Brothers negotiated with potential buyers, encouraging investors to reduce bets against the higher-yielding assets such as the pound. The U.S. dollar-Canadian dollar fell almost 200 pips after setting a high near 1.08 yesterday. Oil, gold, and other commodity prices increased today and boosted the Loonie's prospects. It will be interesting to note next week if this contraction seen in the dollar crosses will be short-lived. Taking a look at some upcoming releases from the U.S., we have the FOMC decision on Tuesday. It is expected to hold rates at 2%. Consumer prices come out the same day, and other U.S. releases during the week include industrial production, the Empire and Philly indexes, the TIC flows, housing starts, and permits. In Europe, the Swiss National Bank will decide on rates on Thursday, and they're expected to hold at 2.75%. Data from UK includes CPI, the claimant count, Bank of England minutes, and retail sales. The Eurozone and Germany put out final versions of CPI and the ZEW economic sentiment. And that wraps it up for this week's Forex News. Tune in next week right here at cmsfx.com. Have a great weekend.